Volume Profile is an absolutely essential tool that I use every single day. In fact, it's part of my daily routine in helping me identify where buyers and sellers might be trapped in the market, using that as Confluence for possible support and resistance levels, and building trade thesis off it. But when you first look at it, it can look so confusing. So in this video right here, I'm going to give you a complete guide in how to use it. Here we go then, my complete guide to Volume Profile. So what are you going to learn in this lesson with me? Well, the first thing we're going to do is learn what Volume Profile is. I'm then going to show you how to identify the key levels from Volume Profile, as well as giving you a step-by-step plan of how to use these levels and action them, and how you can use this plan to build trade thesis. And there's a ton more packed into this lesson as well. So let's get into it. When you normally look at a chart, all you are observing is price and time. All right, so time is always the constant along the horizontal axis, and price will go across the vertical axis. And that's what you're really observing when you're looking at any candlestick or line chart, and it's the structure within price and time. But what you're not able to see is the volume traded at specific price points. And it's that volume that can build you a narrative for what is fair value, what is premium, what is discount, what is a true level of supply or a true level of demand. And without that key data, you're really shooting in the dark. So as you can see, using Volume Profile, looking at this image on the right, we're now able to identify key levels where volume has or has not been traded at key price points. And it's that can give us edge in the market. So when I talk about edge in the market, what do I mean? Well, really, Volume Profile is giving you new key data, which maybe you weren't looking at before. It can create true levels of support and resistance, or supply and demand, and in conjunction or in confluence with a system that you already have or a proven strategy, it can add additional edge for potential trades. Now, looking at the image on the right here, this is exactly the same image, but now I'm showing you potential trade setups just based off the Volume Profile. Okay, we're not even considering anything else yet, just based off the Volume Profile. The red arrow, the first one you see from the top, that is a short trade trigger, and we cover that right down the bottom at the blue arrow before flipping long all the way back up to the red arrow before we flip short and go all the way back down again. And these are some very basic principles that you can do when you understand Volume Profile. And on top of that, we can build more trade ideas, more trade plans, and add it as a great tool in your arsenal for when you're trading. And later on in this video, I'm going to show you exactly how I traded this setup in front of you and why it works. Before we go any further, we need to go over some Volume Profile basics so you understand exactly what it is that you're looking at. Now, the first thing I want you to see is the point of control. The point of control here is the red line. Now, possibly on your Volume Profile, it's red, possibly it's white, possibly it's something else. We're going to go into exactly how to add it on your chart later on. But first of all, I just want you to understand it and what it is. The point of control, or POC, this is known as fair value. Why is it known as fair value? Because it is the price at which most volume has taken place. The most transactions have taken place during a given session at this price point. And that means transactions by both buyers and sellers, which means it represents the most accepted price by both buyers and sellers because they're willing to transact at that given price. The next levels you need to understand are the value area high and value area low. Now, I've identified those on the Volume Profile for you. You can see the white extended lines in this case, but often you won't see that. What you will see is the difference between either a color, like the light blue to the dark blue, or it might be one single color and one area has more opacity or is shaded in more, okay? So value area high, let's stick with that right at the top of the charts, the white line. This represents the highest price within the value area where the majority of volume was traded. It marks the upper boundary of the value area, that would be the white line, and it often acts as a resistance level. Price may stall there, reject there, or break out from there. Traders often look for reactions at the value area high for entries, exits, or confirmations. Again, don't worry, we're going to get into all of this later on in the video. The value area low, as you might expect, is the complete opposite. All right, it's the lowest price within the value area where the majority of volume was traded, and it marks the lower boundary of the value area, and it often acts as a support level, and price may bounce here or break through this zone. Watching price's behavior at value area low helps determine whether you're staying in balance or breaking out of a range. Okay, so now you understand what the value area high is, what the value area low is, and what the point of control is. And the next part to look at is the value area. Now, the value area is the price that represents 70% of all volume that has been transacted during the session. So in this case, it's the bright blue area. That is the value area. The value area high is the white line. It represents the edge of the value area. The value area low is the white line at the bottom. It represents the edge of the value area. Outside of those areas represents just 15% of volume traded. All right, so the majority of volume is always traded in value, and that is standard. Unless you change the feature, it will always be this. You can think of the value area like a magnet zone, and it's where buyers and sellers agree the most on price because it's where they've spent most of the time. So let's go back to that original image, and it was that original image that we traded and we showed trade thesis for. And let's talk about some support and resistance principles. Anyone who's traded with me, done my course, or watched me on live stream, I'm always looking at very basic principles of S&R. People overcomplicate the market too much, okay? S&R is the key to market and understanding structure. So again, let's think about what we just talked about with the value area high. Remember the top white line. That offers a possible R level or resistance level. It is known as premium up there, all right? That is where price is very high, which means it's possible that it is a good location for a short trade. The point of control and the area in the middle of your chart is known as value. That is an area where you could quite possibly get chopped up in a range because buyers and sellers agree that this is good value for price, so it might not want to move away from there aggressively. And the value area low is a possible support level and also a discount area. If we just think about the range of the chart, at the very highs of a chart, you do not want to be chasing longs, do you? Because it's likely that price can become exhausted there. And the opposite, at the lows of the day, you don't want to be chasing shorts because, again, shorts can get exhausted down there. Which is why in this classic setup in front of us, like I talked about earlier in this video, we took shorts near the highs of the value area high, rotating down to the value area low before getting long again and rotating all the way back up to the highs again. All right, so you can see premium and discount, support and resistance. Keep it very, very simple. We're going to respect these levels in terms of S&R until something changes, like a breakout and a retest. And then we can then flip and think about RBS, resistance becomes support, or SBR, support becomes resistance. But until that point, we always respect these value areas. Okay, stick with me here, okay, because I know there's a lot of theory here, but we're going to get into the chart soon, drawing it on, how to put everything onto your chart, how to understand it and build a thesis. But you've got to understand the very basic core principles before we do that. So moving on to nodes, okay, and you've got two types of nodes. The first is a high volume node. Now, this is kind of similar to a point of control. It's an area where a lot of volume is taking place, where lots of buyers and sellers are transacting. All right, so it's a price level or a small zone on the volume profile where a large amount of volume was traded. And these areas show acceptance where buyers and sellers agreed the most because they've transacted there the most. And high volume nodes are typically found in balanced markets or ranging markets. And on the profile, high volume nodes appear as wide fat areas. Now you can see that here. They extend further right and they have large amounts of volume, all right? And you'll see that they have like big peaks in them. It's very easy to see a high volume area. And if we are trading above a high volume area, if we come back to that area, we're going to try and use it as a level of support. And if we're trading below a high volume area and we're trading back to a high volume area, then we're going to try and see if it wants to hold as a potential R level. The last thing we need to look at when understanding volume profile is the low volume node. Now, obviously, this is the complete opposite to the high volume node. A low volume node is a price level where very little volume was traded. And it's in these areas that it shows rejection because price has moved very quickly through that area without much trading taking place. So low volume nodes are often created during very fast moves, news events, or trend days. You might call it an imbalance, okay? And on the profile, low volume nodes appear as very thin areas or valleys. So you can see it's the complete opposite of the high volume nodes. It's where very little volume was traded because there's no fair value there. It means we're skipping through that price level very, very quickly. Either no buyers or no sellers want to participate in those areas. So the last key principle to understand is why points of control or high volume nodes move during the day and what it represents in terms of supply and demand or support or resistance for a market. So in this case here, let's make this really, really simple. This price here, we're going to say it's in terms of $10,000 and this is time and this is volume, okay? And let's do an example of a Rolex. We'll make it nice and simple because you can all remember that. A nice Rolex Daytona, let's just say that's what we're looking at. So at one point in time, the Rolex Daytona was considered fair value at $20,000. We know that because buyers and sellers participated the most at this level. You can see up above, it gets thinner. There's not many people buying up at 60,000. There's a little bit at 50, a bit more at 1430, and no one's willing to sell at 10,000 because it's too cheap. But 20,000, that's deemed fair value. But if we just say we change this and we're looking at a market in a different moment of time, maybe a year later, maybe this could represent during COVID times. Okay, at this point, no one is willing to sell a Rolex Daytona at 10,000, at 20,000. There's a little bit in 30 and 40, but at this point in time, $50,000 is deemed fair value for a Rolex Daytona, all right? And the reason for that can be a few different things. Maybe during this time period, there was not many Rolex Daytonas available on the market, which means you had less supply. So there's demand for less supply and it increases the price of it because sellers know they can get more money. Or maybe we suddenly knew that this down here was really good value and there's a rush to the market and demand just keeps flooding in until it hits 50,000. All right. And you can see there is some selling at 60,000, but buyers are probably unwilling to participate here and sellers are unwilling to participate here, which is why $50,000 seems like fair value. And that's exactly why we call the point of control fair value. And that would be the same for high volume nodes. And that's important to remember when we get into the context of a chart and using it as support and resistance. Okay, so coming into the chart, so I just want to show you the last 3 days of price action because I think there's actually enough moves in the last 3 days to give some really great core examples. So we're going to start off on Thursday the 17th. Okay, and we are going to look to draw this out now. So you want to come over here into projections and you're looking for fixed range volume profile. Now, if you don't have that on TradingView, it's probably because you need to pay for the professional plan or some increased data. Otherwise, you can look to use exactly the same thing on any of your other charting software, whether that be NinjaTrader or something else. And if you don't have this, don't worry. I'm going to show you an indicator you can use, which will do a pretty good job as well. So we're going to go into the New York Open, 9:30 on Thursday. Why the New York Open? Because Where's the most volume traded? New York session, right? So we're going from New York open to New York close. So 9:30 to 4 o'clock. Bingo. There we go. All right. And we get this volume profile on our chart. Now, before we go any further, the first thing I want to talk about is what settings you want on here, because it will make a difference. All right. So row size I always have set to 1,000. Value area normally will be 70. Sometimes you'll see it as 68. Normally 70 is pretty standard. You don't want to mess around with that. Style wise, you know, I just have these set for my value area to be light blue, and outside the value area, I have it as dark blue. You can have whatever you want, whatever you feel comfortable with. Make sure POC is a key level that you can see. And maybe to start with, you might want to put value area high and low on as lines so that you can easily identify them and see them. I'm never bothered about the developing areas because what I'm interested in is the previous day, not really what's happening right now. I'm interested in the previous day's levels because I can use those as potential key areas of support and resistance to trade off, because that's letting me know where traders are trapped. Now, before I go any further, if you are more interested in this kind of content and you want another free video, there's a great video that I've done on TPOs, and that will show you the different types of market profiles and how you can use them, especially with gap ups and gap downs. And I'm going to stick that up here right now for you to have a look at. On our chart. Now, what's the next thing I'm going to do? I'm going to mark out these levels so that when I come to the chart on Friday, I know my value areas. So right here, bang, this is going to be called value area low. And then we're going to do exactly the same thing on the value area high, and one more level right here at point of control. So you should be doing this every day, either at the close or at the morning of the new session when you come, so you're prepared, so you've got some points of interest to be looking at. And let's just do this red, make sure it looks right. Okay, so now we're going to come to Friday morning at 9:30. Okay, so here is your New York open. All right, so you can see here, how are we using this? Well, we know this is a possible resistance zone. This is considered fair value. And this level right here is a possible support area. So normally, I'm going to be honest how I mark these out. I'm not doing it today for the sake of teaching, but I will do these as blue boxes down here and red boxes up here. They can be very thin, light boxes. And what you'll normally find is these areas fit in perfectly with standard support and resistance areas when you're looking at things like 30-minute, 15-minute, and hourly bars. You're going to see big wicks up there. It's going to make sense to you. All right, so when we're coming into Friday, New York open, all right, we know this is a big resistance level. If we are able, my thesis on Friday would be very simply, if we're able to base above this, there might be an extension up here. But if we fail under it and we fail under point of control, we can see we've got low volume nodes. This is very low volume until we get down to what? To value area low. So we know from here, we have low volume and thin structure. So if we fail the edge, all right, right here, which is why I would normally do this as a block, I would say 250s. All right, if we fail this edge, we think about this. If we fail this, then there's a good chance we can drift into this tiny little volume node, but more likely come down to here. So that's my trade thesis. We would either be looking for a gap up and a hold above for an extension, or a failure underneath and a rotation back down to fill in this thin structure. All right, very simple. And you'll see exactly what we get. We get into Friday. They have a few shoves up in the morning. You can see they try and get back up above this value area high. All right, but they fail. All right, they fail to base above value area high. In fact, all they do is they steal London's high and they flop. All right, and they fail numerous times up here, lower highs, and then we get what? A break of liquidity. Now, if you're not going to take this short for the breakdown, I do not blame you. But what do you get? You get a really, really basic trade here. Very, very simple. This is now an R level, and we trade back into it. All right, so we've got old point of control. We've got a nice volume shelf here. We know buyers tried 1, 2, 3 times into the beginning of the New York session. They fail. We trade back into that old point of control. What happens? We rotate. Where are we going to rotate to? Where is good value? Where is discount? Value area low. So if we think about this, you would be looking for a short from here, nice tight stop, down to value area low, and you hit it. All right, you hit it. Once we get to value area low, we're thinking about longs, aren't we? Because we're now in discount. All right, so now we're thinking about longs. We're looking long here, just at the edge of value area low. And what are we looking for? TP1, point of control, which we hit. Where's our TP2? We're not looking for much more above this. We're looking to trade right into value area high, which we hit. So we get both TPs, and I don't really care about anything beyond that because the easy money is made trading between these levels, right? We're trading from extreme to extreme. We're not looking to buy additionally up here, and we're not looking to sell additionally down here unless there is a major shift. And then we get into the close of the day. So what are we going to do now? We're going to do exactly the same as we just did, all right? We are going to look at drawing out these same levels. So again, we want to go to fixed volume profile. We are looking for Friday at 9:30 once we close this session right here into 4 o'clock right here. Right, and we're going to do exactly the same thing again. All right, and this time we're going to do solid lines just so we know that they're different. All right, let's do a solid line there. And we've got a value area high. Again, maybe we'll do this as blue so we know that this is Friday just to make it clear and obvious. And then we've got a value area low, which has moved up just a little peak, and we'll do this as blue. Okay, so moving into Monday, because now we've traded Thursday and Friday, we're moving into Monday now. We now have these new areas from Friday to be considering. So you could delete Thursday if you want. We can just trade off Friday, and we're moving into Monday morning. So let's just get into the 9:30 open, and you can already see pre-market exactly what happened. All right, we trade right into what? A value area high. Now, why is that important? Because this is a R level. Yeah, this is resistance. All the time we're rejecting it. Resistance back down to support. Support back up to resistance. Resistance down to support, point of control. Over resistance, and this is your key trigger point. What's this telling you? R, B, S. Resistance becomes support. Think about it as a basic wave, all right? This is resistance. We trade back to it. It becomes support. It is exactly the same with value areas, which is why once we hold this level and move away from it, coming into Monday morning, when they trade down to this value area high and we've got a huge amount of volume underneath, we expect buyers to hold it and stay back in. And that's exactly what happens, a huge shove up. Now, during that session, if you didn't take the long like me, you would have been forced to wait. So what can we do? There's one big thing we do. We wait and we draw the current profile, all right? So I'm going to go 9:30, because I'm only interested in New York, until whenever it's available to see. Now, some people will draw the overnight session, and that's fine. This will give you some data, but at this point, I'm interested in this session up here. Now, we can see, if I zoom right in, coming into these levels up here, do I want to be a buyer up at this value area high? No. We know that this is a potential resistance level. Where is the support level? We know value area low has been created down here at support. Right here. Okay, this is our support level. What do we have under value area low? We have a low volume node, all right? Now, this is a true imbalance, not an ICT imbalance, nothing like that. This is a true imbalance. Now, it lines up perfectly with this for a reason, because we move quickly through it. This is a true imbalance. So if price comes down here, it is likely to try and hold in a bullish day to go higher. If we get stuck and we turn this into supply, then we can think about what? A rotation down to some of these nodes, but probably we're really looking for a rotation back down to value area high. So my trade thesis on this day was very simple. Once we were up here, I was not interested. I wanted to stay pro trend, which is a bullish move, and I'm looking for a 2-leg pullback into this area where I know lots of shorts will get caught and we trade back to the highs. And if you don't believe that I was looking at that and you think this is all hindsight, you can go and watch Monday's stream where I talked about it live constantly during the stream. And even better, we took it in the Discord. All right, so let's find it. So right here, we're talking about you're looking for bear traps in this area to go back to 400. Remember, pro trend is bullish. Here's the trap starting. What I said on stream, ES might need to test value area low first before this move, and a squeeze can come now if they hold this low. Please be smart, and if you want to wait, we'll let flow zones flip. We'll get into that later. And then you can see down here, I'm looking for a pullback as well for that move back to all-time highs. Now, I draw the whole thing out and I show that I am already in long. I'm already executing off this bounce, looking for the move, and lots of guys started to catch it with me. So what do we get? I wonder what we get. Beautiful, all right? Beautiful, beautiful two-leg pullback into value area low. We dip under and we reclaim. And there's your long trigger. And where do you think we're going? Your TP1 is point of control and your TP2 is where? Value area high. So again, an easy, easy, easy long here without it being too stressful, without needing to overthink it. You just wait. Value area low, stop. Once you see the reaction, stop at the low. TP1 point of control, TP2 value area high. Run as if it goes, but really you make your money in between these two levels, all right? Again, very basic principles of S&R. You don't need to overcomplicate it. Now, it should be said, if you're trading other sessions, okay, like Asia sessions, you can obviously do the same thing for the Asia session coming into London and so forth. For the previous New York session coming into Asia, should be looking at the previous sessions, but I'm always looking at the regular trading hour session. Now, for those of you who are not paying for the pro subscription or you don't have access to this on any of your other software, I will show you a little workaround. If you come to indicators and you type in SVP, you will see session volume profile. Put that on your chart and it will look something like this. Very, very messy, I know, but we're going to change it. So double click in. Okay, and the first thing we're going to change is dark blue and value area, bright green, and value area down, bright green, and point of control red. We're going to take off all the developing stuff. We don't want the histogram on. I'm not bothered about anything else. And there we have it. All right. Nice and simple. And you can use this to save you all that headache. Now, it might not be quite as accurate as the one that we're drawing out, but it will be there or thereabouts. You can see right here, we keep going back in time, leave this indicator on, it's constantly going to show you, here's your value, here's a point of control, here's outside of value, here's value, point of control, outside of value, value, point of control, outside of value. And you can see the same thing over and over again. You can see right here, it's pretty accurate. It's pretty accurate for the previous day. It's not too bad, really, when we think about it. All right, we trade just underneath. Let's draw one on for comparison. So we go from 9:30 into 4 o'clock. Pretty good. So we're comparing this to this. So not too bad there at all, is it? The POC is in the same area. The value area low difference by, 1 or 2 points. Value area high, maybe a little bit different, a bit more difference there, but it's pretty good. It's pretty accurate. And that will give you some good context, at least for when you're coming to the charts each day to build trade thesis. So how do I build my narrative each day then? What is my checklist and how do I build Confluence? Now I've shown you how to trade it, how you have actionable areas. How would I build this? Okay, here is your step-by-step process. First thing we're doing every single day, we're going to look at the volume from 9:30 to 4 o'clock. We're going to do this every single day in the previous day. I now have my volume. Looking at this now, I now mark out my key levels. Now for me, it will look something like this. This is how I actually do it for each day. This is potential supply. And if we're gapping down, this is also going to be supply or resistance rather than support or demand, all right? So these are my key levels, and then I might do a POC. Normally I don't. Normally I just look back because I know where it is. I can see where volume's traded. So coming into the next day, what will my thesis be here? Well, if we're gapping down, which we might well do, let's say we're opening up here, what will I be looking at? I'll be looking to see if we have maybe 1 attempt, 2 attempt, and a failure away, and then a rotation. And if we rotate, where am I gonna look to play to? Well, definitely we've got some support structure, but I'm also gonna look left. Okay, right here, this rotation to here, the old value area high, we might find a bid there. Why would that not be surprising? Well, it's a value area high. We broke above it, we traded down to it, and we found bids there on Monday morning. So it's quite possible we find bids there again. If that fails, the next level will be point of control and then value area low. I won't just be bidding against it though. I'm not trying to catch a knife. I'm waiting for a reaction. That's how I like to trade. Now, another trade thesis for this would be if we start to break above value area low, it means we've had no acceptance down here. This is too cheap, and I'm going to be looking for a long back to point of control. Now, I will respect these volume nodes here, but I'm going to be looking for a long to point of control, and if we get through that, value area high, and then I'm done. Beyond that, if for some reason we gap up here on this day instead of down here, and let's say we gap up, then what I will be looking for is a pullback into this level to trade away from, because this would now be a support structure. This R level would now be support. So it's very simple. It's basic principles of support and resistance. If you understand SNR, it's very, very basic. Now, before I show you how I use it for Confluence, I want to just quickly talk about some of the positives and negatives that I see with traders using volume profile. Now, the positives, as you can see, it clearly defines levels. It's very, very easy to see those levels of value area high, point of control, value area low. Very easy to identify them and use them as possible levels of SNR. Those levels offer very, very good RR, because if you are buying the value area low, it means quite possibly you get a rotation back up all the way to the value area high on a standard rotational day, and that can offer massive RR. And the third thing I'd say is it's increasing your edge. Not many traders understand how to use volume profile properly. And if you do, and you can use it for Confluence in your trades, it's going to give you edge. Now, the negatives of it is it's discretionary. It requires discretion. What do I mean by that? There's no set way to use it. Okay. And with that, it means that you might move your ability to get in and out the market. Maybe you're not consistent with your size, you're not consistent with your execution, so it can be hard to track from that point of view. The second thing I see is sometimes, if not used correctly, it will encourage you to pick tops and bottoms, because if you see the market flying up towards the current value area high and you're picking a short there and it just screams straight through you, it can get you in a lot of trouble. So you need to have good risk management, or it needs to be used in addition to your current setup as a Confluence area, which is how I use it. And I'm going to show you exactly how now. Now, using this same example, we're going to just keep focusing on this same example because it gave a lot of action, which was great today. If you got short up here at value area high, all right, while it was even developing at this stage, it's too early on in the market, in my opinion, you would have had to sit through 10, 15 points of drawdown, and maybe that worked out for you. Maybe it was okay for you. But for me, that's a very, very risky short. And we're in a pro trend up. So for me, I'm always waiting for the long. Like I showed you, I was very aware about this long, and this was an area I was interested in for them to trap traders, especially breakout short traders who are chasing the market lower, thinking that we're going to get a complete collapse when we're probably going to protect this low volume node and trade into the value area low. So how do I use it as Confluence? Well, if you're not comfortable pitting long positions here on limits because you're worried about that huge breakdown on you, I understand. That's exactly how I am. So I wait to see a reaction. Now, what might that reaction look like? I'm waiting for something as simple as a big bullish engulfing candle, this right here, moving away. I'm waiting for something as simple as a change in structure. Right, there's your change of structure. Once I get this change of structure or change in character, I'm waiting for what? A pullback into this level to then get long. Now, for me, a very easy way of doing that is to use my flow zones. And I've taken a lot of action off here just to make it real simple. We're in bearish flow. Bearish flow, here's your 2-leg pullback. And this point here is a buy. All right, a very simple buy. This is what we talked about. Again, to show you that this is not just hindsight, right? During this, while it was building, I was telling them, look for this pullback to get long, right? This is exactly the same trade setup. This here gives me confidence because now I know, okay, we've held the low volume node right here. This is the edge of that low volume node. We've reclaimed the value area low. We have an engulfing candle and bullish momentum away from an area which I know is cheap. It's on discount. And this is our first pullback in. This is likely to hold. This is RBS, all right, RBS. So I'm long here with good confidence that we're going to move higher because I've seen the reaction on the key level. That's how I like to use it. I won't always leave limit orders down here because there is just as good chance that it flushes down. Another factor which will drastically increase your win rate is understanding the higher time frame narrative. All you have to do is zoom out, all right? And you will see that this market right now is trying to move higher. It's breaking out higher highs, higher low, higher highs, higher low, higher highs, higher low, higher highs, higher low. Do not try and be a hero, okay? Wait for a retest of a key support level when we're in bullish structure to think about getting long. Do not try and play the supply or the R level. Just wait. When we get a shift of narrative and the higher time frame starts breaking down and we're making lower highs and lower lows, then you can start thinking about either taking shorts at value area high or waiting for clear breakdowns of value area low and for that area to be retested to go short again. That's the end of the video. That is a full, complete breakdown of how you can start using the volume profile in your trading setup every single day to get you prepared for the market. It's so simple and easy to use and extremely powerful. And if, like me, you use it as a Confluence area, it's going to give you confidence to get into trades that maybe before you weren't ready to size up into because you didn't understand they were an A+ setup. If you want to learn more about how I trade, I'm going to post all the links down below. And don't forget, I trade live Monday to Friday from 9:30 Eastern. I hope to see you on the stream real soon.